year, your day's finished perhaps as a swing trader. And obviously, therefore, the profit and loss you made was the distance between here, and that's your P&L. Now, obviously, as a scalper, you would have made a lot more if you're any good at scalping, because you would have made money on this, you would have made money on this, you'd have made money on this, you'd have made money on this. Now, if you just took those trades because you weren't trading perhaps as a scalper during that period, because that's outside of your hours, then obviously when you add up all of these lines, and I'll just do the lines again, and you say, right, well, there's the first line, and obviously you start measuring those lines in terms of the total P&L, what you find is that the total of those lines will be way beyond what the swing trade made. Way beyond what the swing trade made in terms of profit and loss. But if you're not making what the swing trade makes, this is why we keep talking about the maximum profit you would make on a 3-lot, right? That's how you measure it. In other words, if this is a swing trade here, from top to bottom, this isn't about the scalping side of it. This is still about the swing side. But if that swing trade is worth $5,000, then obviously if you've been involved in the management of that position, then you would expect to see that swing trade of $5,000 being $5,000 on a 3-lot. That's how you calculate out the actual P&L you would have had on the swing. That's not about your profit and loss on a scalp, because a scalp is from swing to swing, and that's what you should be trying to measure. So for example, as an oil trader, you'd have been looking at that oil and you would have been saying to yourself, right, how much could I have made as an oil scalper? And you simply would then go into the oil scalps and you'd have says, right, well, as an oil scalper, how much should I have made? Or you just calculate what the maximum swings were. So for example, on this oil scalp here, how much should I have made from here to here? Well, 97.50s to 96s is $1,500. From here to here, $50. So that's $2,000. And from here to here, $1,000. That's $3,000, right? So that swing, those 3 swings made $3,000. So as a 3-lot trader, you should have made $3,000. As a scalper, $3,000. That's for 3 contracts. So per contract on that swing, you should have made what? Per contract, you should have made $1,000 per contract. Yes? So per contract, you should have made $1,000 in that period. So if you're a 2-lot trader, a 5-lot trader, you would have been looking at a $5,000 session there, $5,000 profit, because you're obviously managing in and managing out positions, taking targets, hitting measures, and you're managing in and out of positions. So you're never going to swing high from the top edge sell and the bottom edge buy. It's just not possible. So you take 3 contracts to do the same thing. That's how we would then work out during that period that you should have made $1,000 per contract. If you've beaten $1,000 per contract, look at your own P&L and see if you've beaten $1,000 per contract during these hours. If you've beaten $1,000 per contract, you are a good trader. You will become very, very, very wealthy from your trading. Yeah? $1,000 per contract. If you've managed to do that during this period, I mean, that's 97.50 to 95 evens, guys. That's a 95.50. That's a $2,000 swing. So on a swing basis, you would have been expecting to do $2,000 in total for 3 contracts. But on a scalp basis, $1,000 a contract. If you've done $1,000 a contract or more, as I said, you will be a successful trader. In fact, you're probably already a successful trader, a very successful trader. If you've done $1,000, you're borderline as a trader. You're borderline being successful. If you're less than $1,000, you're still retail, because you should easily have been able to do $1,000 during that swing. You're still retail. You need to get, and obviously the closer you get to something like 0.5, the more there is a chance that you're just going to blow your account at some stage. So if your profit and loss during that sell-off there was less than $500, you won't survive. It's as simple as that. You'll get found out by the markets at some stage because you're not making enough from the times when it's dead obvious. Sounds as if that's a bit harsh, but it's not harsh at all, it's just a reality check on people as to where they are in trading. Now, the good news is, you can do something about it. The good news is that, and this is where people who have high success rates, but simply have high success rates because they close their trades off for one-tick profits all the time, simply get found out because, you know, they look at it and say, but I had 100% winners on that trade with 10 winners out of 10, but I only made $100. And you go, what? $100? You're trading at 0.1. You're never going to be successful, are you, in the long run? Not with those kind of numbers. So this is where it's important to analyze what kind of number you're trading at. Are you getting in for the maximum you possibly can, or are you leaving way too much money on the table? Figure out how much money you're leaving on the table by simply grabbing a period of time, looking at the major swings. I'm not talking about every turn, every single little turn. I'm talking about the basic major swings that you can see inside the move. Well, there's really only been that one swing from the bottom to the top so far, so that's the swing you'd measure. How much money did you make out of that swing, bottom to top? And just do some calculation. Now, you might say, but there was no value for me to buy it, so therefore my results are zero. Well, that's okay, because if there was no reason to buy it, you've got an excuse for not being in the trade. You're not comparing yourself to the move. What I'm saying is, when you should have been in a trade, and you know you should have been in a trade, and you didn't get into a trade, or you did get into the trade, then you can obviously look at that and calculate what your performance is based on that three-lot narrative, which means it should have made $1,000 per contract. It's a great way to start measuring your overall performance against the size of the trend that ultimately unfolded. Swing high to swing low. Pretty straightforward. Aye.